So two people walk into the same house, same neighborhood, same price, same day. Both of them make an offer on the home. Both offers get accepted. Both of them take out a mortgage loan. But one of them will pay $40,000 more over the life of their loan. Not because they got a worse deal and not because they negotiated poorly, but because of a 3-digit number that one of them has quietly been ignoring for years. Your credit score doesn't just determine whether or not you qualify, it actually determines what you pay. Most people have no idea how much that number is actually costing them, or just how fixable it is. So let's get into it. A credit score is a 3-digit number between 300 and 850. Lenders use it to predict how likely you are to repay money that you've borrowed. And the version that mortgage lenders use is called a FICO score. Here's something critical that most people don't understand. The score that you see on Credit Karma is not the score that your mortgage lender sees. Credit Karma uses what's called a Vantage score. Most mortgage lenders use a FICO score 2, 4, and a FICO 5. These are pulled from all 3 credit bureaus, and they use the middle score. Your Credit Karma number might say 710. Your mortgage FICO might actually be 682. Those are 2 completely different conversations. The only way to know your actual mortgage score is to have a lender pull what's called a tri-merge credit report. Or you can go to myfico.com and you can get it directly. If you're planning to buy a home in the next 6 to 12 months and you want to know where your score actually stands, reach out before you apply anywhere. We can look at your score and tell you exactly what to do to optimize it. Link is in the description. So there are 5 factors that determine how your credit score is calculated. So now we'll talk about the 5 factors that actually calculate how your credit score is determined. I'll give you the real weights. Payment history is 35%. The single biggest factor. Pay on time, every time, all the time. Just one 30-day late payment can drop your credit score by 60 to 80 points. Credit utilization, 30%. This is the percentage of available credit that you're actually using. If you've got a credit card with a $10,000 limit and you're carrying a $3,000 or more balance, your utilization is 30%. For mortgage qualification, you're going to want to be under 10%. You don't want to have 30%, you don't want 20%, you want 10% or less. This single change, paying down balances before applying, can move your score 20 to 40 points. Your length of credit history, 15%. How long your accounts have been open. This is why I tell people, do not close old credit cards, even the ones that you don't use. That history is actually working in your favor every single month. And one extra pro tip, if you've got a credit card with an annual fee, oftentimes credit card companies will allow you to open a non-annual fee credit card and move your credit limit from that card to the non-annual fee card so that you don't have to close your account and you don't lose credit for all that credit history. Credit mix, 10%. A healthy credit profile includes different types of accounts. Credit cards, installment loans, auto loans. Mix matters. New credit inquiries, 10%. Every single time you apply for a credit card or any type of credit in general, a hard inquiry hits your credit report. Each one can drop your score by 3 to 15 points. And they stay on your report for a couple of years. This is why I tell clients, stop applying for new credit in the 6 to 12 months before you decide you want to buy a home. No new car loans, no new credit cards, nothing. All right, so let's talk about what's actually killing your credit score. Most people have a lower score than they should, and they're not really doing anything obviously wrong. They're making subtle mistakes that can add up over time. High utilization on one card. Even if your total utilization is low, having one card maxed out hurts you big time. Spread your balances across different cards or pay them down individually. Errors on your credit report. This one is underestimated. Studies suggest that a significant percentage of credit reports contain at least one material error. You can get your free credit report at annualcreditreport.com. You can pull it weekly now. It won't even hurt your score. Look for accounts that you don't recognize, late payments that you know you made on time, or balances that are reported incorrectly. Dispute them directly with Equifax, TransUnion, and Experian. Collections accounts that are still reporting. Pay them, get documentation that the account is settled. Some collections have a statute of limitations on how long that they can report on your credit report. Know your timelines. Closing old accounts. I said this earlier, and I'll say it again. Do not close that card from 2009 that you never use. That account is silently adding to your average credit age every single month. If you're sitting at 640 or 660 right now, and you want to get to 720 before you buy, I can tell you exactly what moves to make and in what order. Just book a call using the link in the description. We do this as a part of every pre-approval consultation. It's completely free. All right, so here's some of the fastest legal ways to improve your credit score. Let me give you the highest leverage moves in order. Pay down your credit card balances below 10% utilization. This is the fastest way to improve your score. If your card has a $5,000 limit, get the balance below $500 as quickly as possible. Do this on every single card that you have. Second move, dispute errors on your credit report. Go to annualcreditreport.com, pull all 3 bureaus, dispute any error directly with the bureau that's reporting it. You can do this online. It's free and super easy. Move number 3, do not close those old accounts. Don't open new ones. Leave your oldest accounts open and don't apply for anything new until after you close on your home loan. Move number 4, get current on any past due accounts. Bring them to current. The older that late payment gets, the less it matters. But current is always better than past due. Pro tip number 5, become an authorized user on someone else's account. If a parent, spouse, or trusted family member has a credit card with a long history and low balance and perfect payments, and they add you as an authorized user, you inherit the benefit of that history. Important note for most mortgage purposes. Some lenders will discount authorized user accounts, unless you're a spouse or demonstrably using the card. But as a score building tool, this is legitimate and effective. Number 6, Experian Boost. This is free. It lets you add utility payments, rent, phone bills, and streaming services to your Experian credit report. For some people, it adds 10 to 20 points instantly. What a higher score actually saves you. I want to go ahead and anchor this with real numbers. On a $300,000 mortgage at a 30-year fixed rate, a borrower with a 620 credit score might get a rate of 7.5%. Monthly payment, $2,097. A borrower with a 760 credit score buying the same house might get a rate of 6.5%. Monthly payment, $1,896. It's a $200 per month savings. Over 30 years, that's $72,360 in savings. Same house, same day, same lender. Different score, different rate, different life. And that gap between the 620 and the 760 could often be closed in 3 to 6 months with the right moves. This is why credit strategy before buying is not optional. It's one of the highest return activities you can do before signing anything. Your credit score is not fixed. It is not a final verdict. It is a number that responds directly with behavior. And with the right moves in the right order, you can change it faster than you think you can. DM me the word credit on Instagram at Steve Conti Pro, and I'll send you my free ultimate guide to building a great credit score. It covers every factor, every move, every tool in plain English. Or book a call using the link in the description. We'll order your actual mortgage scores, not your app scores, and give you a specific action plan. The application link is also in the description and pinned in the comments. If you're already good, and if you're already at a good score and ready to go, subscribe if you want more content on mortgages, credit, real estate in plain English. I'll see you in the next one.